Good morning. Welcome to the video conference of M. Dias Branco with reference to the results of the third quarter of 2024. We have with us Gustavo Lopes Teodosio, Vice President of Investments and Controllership, and Fabio Cefali, Director of New Business and Investor Relations. We inform that this event is being recorded and that during the presentation of the company, all participation will be only listening to the video conference. After that, we will open the question and answer session only for analysts and investors. The translation is available clicking on the interpretation button. For those of you listening to the conference in English, the original audio in Portuguese can be silenced clicking on mute original audio in the platform. The transmission is also being made simultaneously on YouTube at the address www.youtube.com/mdias. We'd like to also clarify that any declarations which may be made during this video conference with relatives to the perspectives of M. Dias Branco's business are merely and goals are beliefs of the management's perspectives and based on information currently available. They involve risks and uncertainties and premises as they refer to future events and therefore depend on circumstances which may or may not happen. Investors should understand that economic conditions in the industry and other operational factors may affect the future results of M. Dias Branco, which may differ materially to those expressed in these future considerations. I would now like to pass the word over to Gustavo, who will start the presentation. Gustavo, please go ahead. Good morning to everyone. Welcome to our disclosure results for the third quarter of 2024. Starting with a few highlights, the net revenue reached 2.4 billion reais in the third quarter of the year. When we look at the accumulated for the first 9 months, net revenue has already passed 7.7 billion reais. Our net revenue went up to 419,000 tons with 1,000. Even though this net revenue, these numbers are below the potential of the company. Therefore, we're taking a series of measures to increase our sales volume, increase our pricing performance, and become more adequate to our SG&A, and optimize our costs of the transformation of the company. The results reflect a market which is more competitive, a little bit with very little margin for pricing due to the inflationary scenario and the devaluation of the Brazilian real, which has direct impact on the cost of acquisition of our imported raw material, which in our case represents approximately 60% of all of our costs. The cash drawer closed the quarter with a cash generation of 67.2 million reais. This brought us to a level of debt which is very balanced, with 82% of our debt in the long term, and with a AAA rating reaffirmed by the Fitch for the 7th year in a row. We continue focused on our launches and new products for the consumer, and we highlight that the malted cookies of DEC of Piraquê, the Goiabinha of Piraquê, in the pasta market, M. Dias represents the launches in a new and innovative launch of Lámen with 65% less sodium, which is already in our portfolio in the Adria, Isabela, Chichester, and Veloso brands, and will enter the portfolio of other brands in 2025, also with the distribution in the North and Northeast. I'm going to now pass it over to Fabio Cefali to follow our presentation, who's our Director of IR, and I will be back at the end for the session of Q&A. Fabio, please. Good morning to everyone. Gustavo, thank you for the introduction. Before I go into the details, I would like to clarify about a few adjustments which were made starting in this quarter in our model of results disclosure. On this slide here, I'm going to show you the opening of this, starting this quarter, starting with the net revenue, which will start to be disclosed in three separate groups or categories. The first group being which we call core products, which includes three categories: cookies and crackers, pastas, and margarines. The second group is the categories of which we call wheat milling and refined oils, which includes three categories: wheat flour, bran, and vegetable shortenings, industrial vegetable shortenings. And the third group, the adjacencies, which are the products with the highest potential for growth, with average prices that are higher and higher margins, which includes a series of categories such as cakes, snacks, cake mixes, packaged toasts, health products such as Jasmini products, and also sauces and seasonings. The second adjustment is in relation to the opening of the volume and average price, which will be disclosed in the following net revenue. We'll be doing this as the total net revenue of the company, which includes these three major groups. And the market share and the capacity, production capacity, will be disclosed annually. Information that will be disclosed in an annual basis. And during the disclosure in the fourth quarter, we will give you that information. These numbers, the market share, the cookie and basket market share, the production and utilization of our capacity. The cost of goods sold we will start to disclose following this. The first group will be raw materials, and here we talk about wheat, palm oil, sugar, cacao, among other inputs, packaging, labor, indirect costs such as depreciation and amortization, and the cost of goods sold. And to finalize this part, the curves with the commodity prices will be provided with market information at market prices, both for wheat as well as for palm oil. So starting in the third quarter, this is the model that M. Dias will now follow for the following disclosures. Now going into the results, starting with the chapter of market and net revenue. The first information is with reference to the markets. We're not talking about the M. Dias numbers, but the numbers about the market in general for cookies and crackers. In the cookies and crackers market, starting with that market, in terms of value sold, showed stability year on year and a growth of 6% compared to the third quarter of 2024. The volumes grew in both comparisons, 1% in compared with last year and 5% compared to the second quarter. The units sold also grew. The average price in the market retracted by 1% compared to the previous year, and compared to the previous quarter, it was up 1%. In the pasta market, it grew compared to last year and has maintained stable in compared to the second quarter. In terms of value, in terms of volume sold, there was growth of 5% compared to last year and was stable when compared to the second quarter. The number of units sold grew compared to last year and fell by 1% compared to the second quarter. The average price fell 4% compared to last year and it was stable in compared to the second quarter of this year. This fall of 4% in the average price in pasta compared to a fall in 1% of cookies and crackers is related to the lowering of the price of the commodities, especially wheat, which happened over the last 12 months. And we'll go into details regarding that a little bit further ahead. Going to the numbers of revenue, average price of M. Dias Branco And here we have numbers that are consolidated in our revenue. As Gustavo mentioned in the opening, we have had a total sales of 2.4 billion and of 7.1 billion reais, which represents in the quarter a retraction of 12% in the net revenue and of 11% year on year, year to date. The volumes went down by 7% from 507 to 419 compared in the quarterly comparison, and in the year to date grew by 1%. So there has been growth in volume in the year to date numbers. The average price following commodity prices fell by 6% compared to three quarter of 23 to three quarter of 24, and showed growth of a high one digit in the second quarter of 24 to the third quarter of 24. Year on year, the average price fell 12%. Now looking at our costs and expenses, these two graphs represent the price of the commodity prices in dollars in the market, and on the left is the wheat prices measured in dollars per ton, and then palm oil measured in dollars per ton. We observe here on a longer horizon is that since 2022, starting in June, July, wheat has presented a tendency to lowering until the middle of the second quarter of this year, when it went up from $213 per ton to $279 per ton, and since then has kept at a level close to $260 per ton. Due to this volatility in this period between March and June in the price of this commodity, palm oil presented in the last 12 months a behavior a little bit more regular compared to wheat, remembering that palm oil is the second largest commodity utilized by M. Dias. But at the end of the day, at the end of the second and third quarter, had a behavior of prices rising, with the price, since the wheat was about 1,200 per ton, and at the end of the quarter, $1,255 per ton. The principal factor here is a combination of factors, but the principal factor here, in our vision, were the climatic conditions in South America, remembering that together with Asia, South America is one of the biggest worldwide producers of palm oil. Looking at the variable costs compared to fixed costs, gross margins and average price over the last quarters, and in the year to date, what we see in the previous slide of the lowering of commodity prices in the last 12 months and increases in the recent months, what we've observed here is in the first line of the variable costs, which grew in the third quarter of 23 until the third quarter of 24 was a behavior of lowering of prices, but due to the raising in prices of wheat and palm oil and the devaluation of the real, the variable cost was 2.7 reais per kilo to 3 reais per kilo. Fixed costs in the measurement per kilo has a behavior of stability of 1 real until the first quarter of this year, with the volumes that were produced and sold in the second quarter, we were able to dilute further our fixed costs, getting to a fixed cost per kilo below 1 real. But then due to the volumes, as Gustavo mentioned at the opening, which were below what was expected for our potential and a lower dilution of fixed costs, we finished the quarter at 1.1 reais per kilo in the quarter. This had a direct impact on our gross margin, remembering that we had a reduction of the variable costs in the previous quarters and stability of fixed costs. The gross margin increased. It had a small retraction in the second quarter, and a slightly larger retraction in the third quarter due to the factors explained above in relation to costs and the question of the volumes below the expected amounts and due to the reduction of the average price in the division year-on-year, 6.1 per kilo last year and 5.7 reais per kilo this year. In the year-to-date numbers, the tendency is practically the same, with a reduction in variable costs, stability of fixed costs, and expansion of gross margins. At the same time, there was a retraction in average costs and average prices. Looking at our expenses, in the measurement of SG&A, we have the selling and general administrative costs and relative costs. These expenses represent of the overall cost of the company and also in nominal terms in millions of reais. So looking here, up until the end of last year, we were maintaining an expense and percentage between 20 and 21%, remembering that during recent years, several initiatives were made for the reduction of these costs of SG&A as a percentage of net revenue, and these initiatives resulted in good results. However, in the last 2 or 3 quarters, expenses have grown a little bit higher as a part of net revenue, total net revenue, not as a matter of nominal results, which we see here. Remembering that in the third quarter of this year, SG&A totaled 553 million reais, a little bit below what was done last year for 2 reasons. There was a retraction in volumes, which also has a direct relations with the variable costs, and also had a series of initiatives which permitted us to compensate or annul the inflation in the period. Due to the fall in the average price, the SG&A had an increase of 20 to 21%, reaching 23% in this period. Year to date, in nominal terms, it's practically stable, with 1,686 million and 1,600 million this year. But due to the difference between average prices, the SG&A increased as a percentage of total income. Looking at our EBITDA margins, nominal margins, we wound up with a margin of 9.5% below the potential for M. Dias. Our nominal results and well below what was registered last year. In the year-to-date numbers, a margin of 11.8, below the 12.3 of the same period of last year, and also a slight retraction in the results, in the nominal results. The net revenue, in general terms, has accompanied the tendency of the EBITDA, both in relative as well as nominal terms, and we closed the period with 5.2% of net margin, 125 million reais in nominal terms, practically stable in the net margin in the accumulated 9 months to date, and 547 to 470 million in nominal terms. Looking at the cash generation, debt, and investments, we generated 67 million in cash, operating cash, free cash flow, 417 for the 9 months, compared to 417 and 1 in the accumulated year to date. There was a consumption of working capital close to 188 million in this quarter, and 458 in the year to date. The next slide, in what line we had this consumption of working capital. This was basically concentrated in the line of stocks. Here the measurement is in numbers of days. We have 77 days of stock coverage in the third quarter of last year, and 84 in the second quarter of this year, and 108 days at the closing of this quarter. Basically, this higher coverage of stocks comes from volumes sold below below what was expected, and also had the impact of the higher raising of prices in dollars and the devaluation of the real, the Brazilian real, in that period of time. On the other hand, the line of suppliers presented improvements in terms of the previous quarter by 1 day, and of 7 days in comparison to last year. So this demonstrates that we are able to maintain our focus on cash generation and in the improvements which are available both in the results as well as in the cash generation of the company. On the line of clients or receivables, there was stability compared to last year and a slight increase compared to the previous year. Looking here at our leverage, our level of leverage for the third consecutive quarter, we closed the period with a net cash position zero. In the balance of the third quarter, had more cash on hand rather as compared to debt, compared to 29 million reais above our level of debt. In gross cash was above 2.1 billion reais, which was closed at the end of the third quarter. For the 7th year in a row, we have a AAA rating with stable perspective reaffirmed by Fitch for the 7th year. Our debt is almost totally on a long term, looking at 82.7% in long term, and only 26% with coming due in the coming year. In terms of investments, we invested 85 million reais in this quarter, with a focus on machines, equipment, and the principal highlight here, as Gustavo mentioned at the beginning, was the lemon, the unfried lemon, which entered into the second and third quarter this year. An investment of 198 million, 12% below last year. Remembering that last year we made relevant investments in technology, information technology, for the changeover, for the implementation of SAP, which happened in the first quarter of 2024. Reaffirming our strategy of growth with profitability, focusing on other categories, which we call the adjacent categories in the new model of disclosure, and international strategies like Acacia in Uruguay. And the highlight of this moment was the consolidation of our strategy, our commercial strategy, which previously was divided into defense and attack. Remembering that the defense areas were the north and northeast region, and the attack was the south and southwest and central west. And recently we consolidated these two fronts into one single management area nationally. And we maintained a productivity and efficiency program, which is underway in the company. These are the principal levers of growth, and these are the enablers. We went through this in the recent years and recent quarters, seeing that the levers and enablers are important for the operation of our volumes, cross-selling, prioritizing these brands, Jasmine, Piraquê, Viratarella, and Fina, in wheat flour, innovation in the cookies and crackers, and in the healthy brands, good things happening in the healthy brands and in pasta with the non-fried lemon, exclusive brands for cash and carry, which attends the consumers who seeks products in a different price level, marketing, commercial excellence, JPB, joint business plan, and very good level of results in our revenue management and all of the digital transformation. Reaffirming that what was mentioned by Gustavo at the beginning, these were results below the potential of M. Dias, and was faced with intense competition, retailers reducing inventory levels, commodity volatility due to the high interest rates, current interest rates, volatility in commodity prices, and especially in the second quarter of this year and the third quarter, together with the depreciation of the Brazilian real. However, from the internal point of view, in recent months, within this context, we did not achieve an adequate balance of price, volume, and margins. As was mentioned in the slide which we showed of net revenue, volume, and average price. These are the actions which are already underway for the recovery of our volume sold and of the profitability and structure of the company. The consolidation of the commercial team into a single national leadership, discontinuing the approach of attack and defense. It doesn't mean that we will no longer exploit opportunities for growth accelerated in the attack areas, where M. Dias Branco has a participation in that market below that which we have in the defense areas, which are the regions north and northeast. Optimization of the commercial structure, organizational structure, which is something which is underway right now. We put this in our release, the reduction of several positions in the company and having between company labor and third-party labor, the creation of a team which is totally focused on the food service market, which is a field where MGS has a lot of opportunities for growth. And we're going to go into that area in this market in a very organized and focused way. The adjustments in the logistics network for production and distribution to be able to reduce our costs of transformation and also of the delivery of our products. The allocation of the revenue management team, which includes pricing under a vice presidency of the investments and controllership under Gustavo's leadership, and the revision of our price policy, the strengthening of our exports, principally in the markets where MGS already operates. There's lots of opportunities there for leveraging our revenue. The consolidation of a team totally dedicated on this commercial excellence, which is the principal market, is our go-to-market strategy. How do we get to our clients, and all of the coordinated effort for the reduction of SG&A. Starting with the agenda of ESG, these are the principal indicators: consumption, water consumption, reuse of water, waste products, leadership with positive results, a reduction of labor accidents, purchases from local suppliers. And here it's worth mentioning that we had an increase in the consumption of water in the quarter compared to the previous year, because it has a total relationship with the lower level of volume sold and has an impact also on the volume of production. So we wound up diluting this. We had a higher dilution of this indicator due to the volume sold. I'm going to close here the part of the introduction, and now we can go to the question and answer section. Thank you. We now start the question and answer sessions for investors and analysts. If you would like to make a question, please hit the raise hand button. And if your question has been answered, please leave the line clicking again on that same button. Thank you. While we collect questions. Thank you. Our first question comes from Guilherme Palhares from Santander. Guilherme, your microphone is open. Good morning, Gustavo, Fabio. Thank you for taking my question. First of all, congratulations for the courage to do the restructuring in the release, even in a challenging quarter such as this one. And looking at the question of the highest level of information to try and establish a competition which is more equivalent in the sector. So congratulations for your courage to do that at this point in time. Chris, due to this restructuring of the attack and defense zone, why have you decided to change that? And try to understand a little bit, as Fabio mentioned, about the development of the market of food service market, and what do you see as opportunities in that area, and where the company is today, and why make this move now? Oi, Guilherme. Good morning. Here is Fabio. I would like to also thank you for your comments. We already implemented this new model of a disclosure for the good of the company. And here the interests are totally aligned with the company, between the company, the controlling shareholders, the minority shareholders, and the executives. So we have a lot of confidence that this will be a movement which, as you mentioned, which demands focus, courage, and which will be beneficial for all the publics who accompany M. Dias and who invest in M. Dias. With relation to the restructuring in terms of defense and attack regions, the first point is what this does not signify. It doesn't mean that we're going to not take advantage of any opportunities for accelerated growth outside of the old Northeast defense region, where we have a market participation which is above 50%. We have lots of opportunities in Sao Paulo, in the south states, in the south, center, west. However, we understand that we need at this point in time, more than having two major regions, is to understand and diagnose each market in a way that is a little bit more granular. And through this understanding, this major division of instead of having two commercial regions, we wound up losing it. It winds up not making so much sense. Now I'm going to pass it over to Gustavo, who's going to add to that. Guilherme, thank you for your questions. It was a change in the model. We had been wanting to do it, but it's more difficult to do it when you have a quarter when the results aren't that great. However, I think that it's a step that's been taken. And also to complement what Fabio mentioned, the idea is to optimize the structure doing that. We're able to standardize the process, the commercial strategies when we have both areas unified, and we gain more agility in the implementation of a service model. And we also understand that this change will simplify somewhat the company is betting a lot on the acceleration of this project, product. The success model, which has already been implemented in the defense area, should flow in a better way with the same manager operating in the other regions. So I think it's something around there. Going into the food service question, I think we gain a lot. We brought a new director with a lot of experience in that area from one of the four largest trading companies, global trading companies, with lots of specific knowledge about that market. We understand that M. Dias works with several products that have a great fit for that type of market. We have the fats, the margarines, the pastas, the wheat flour itself. We have a gigantic market still to be exploited by M. Dias. Since we don't have a specific area, we wind up not focusing on that market and this market that this market demands. It's a very relevant market, and lots of things change. The dynamic of pricing. Uh, we can't price the branded items with and more industrialized with our brand, and then price it fats for B2B and wheat flour. Another important thing is that there's a necessity to think about new products to attend specifically that channel. It can't just be something that's standardized. There's a lot of things to be developed together with the clients, the composition, the formulas, even the packaging itself, which we have to send for transportation for specific clients in the B2B. So it's a different business and requires a different type of operation. That's why we understand that, in fact, the company wants to take advantage of the opportunities and specialize a bit more. That's the idea that's behind the creation of this food service area. Fabio, did you want to add anything? No, nothing to add. Thank you, Gustavo. Just make one quick follow-up. Today, I imagine that this channel is being attended by the cash and carry stores. What do you see in this model of direct service? Or do you think that will there be direct routes in the company for this channel? And if you can see a little bit what you see from the standpoint of your relationship with the channel that already exists, how much you will be cannibalizing your current market, and give us a little insight in that area. Guilherme, we understand that it should not have any cannibalization because that's why we're doing this change a little bit further ahead. There's a very big connection with the weekly meetings between our head of food service, Danielle, with our director of pricing, for Diaz Branco, who's responsible for the mills, because the dynamic of pricing is totally different. When we look at food service, these are products with lower added value and more connected to the commodities market. This involves the correlation with the cash and carry market. However, it's a market that not necessarily buys from the cash market. For example, the industries. There are large industries in Brazil who can buy directly from MDS who do not necessarily buy from the cash and carry stores. Once again, there's a lot of formulation that we need to do. And in fact, we're not able to do that with the cash and carry buyers. So we need more specification. We have to bring these clients to the company, develop recipes for the food service market. It's a series of services tied to this channel, which they won't find in their cash and carry stores. Beyond this, all of the characteristics are very distinctive compared to what they'll find in the cash and carries. And there's a specific pricing and very carefully done exactly so we'd go into this process of cannibalization of our current market there, our current customers. Thank you. Next question comes from Isabella Simonato from Bank of America. Isabella, your microphone is open. Thank you. Thank you, Gustavo, Fabio. I wanted to speak a little bit about the diagnosis that you have done to design these measures, which you're announcing as measures that have to be done to put the company back on course. Principally, this discussion of the lack of net revenue, bringing net revenue in line with price and volume. What was identified? Where were the failures in the strategy? Was a little bit reading the competition, the channel, understanding the channel, stock in the hands of the retailers. Where do you think there has been a failure in the composition of this correlation of revenue? And then within the measures that you've announced, will cause a little bit of attention on our side. First, the change in the vice presidency, which will run the strategy of the price strategy of the company, leaving from the commercial area and going, Gustavo, to your side. Is this a permanent measure? Are these sporadic measures? What is behind this decision, the taking of this decision? That's my question. Thank you. Isabel, thank you for your question. First of all, I'm going to start at the end. If it's a permanent measure or not, we have no commitment with making mistakes. So if we understand that we should revisit this process, we're going to revisit it. It's part of our operation. I wouldn't say the word failure in our strategies because it has nothing to do with failures. We're looking at the evolution, the natural evolution. The market continues, the company continues to understand that there are opportunities in growing more in Brazil in the South and Southeast and Center West regions, we understand that there are opportunities to enter into new categories through research and development. We have no restriction about that. There's lots of things evolving, lots of products being launched, which you'll be finding about as we go forward. There are other opportunities in new categories. We understand that this is the way forward, and going forward, not now, but further ahead, we understand that it makes sense to start a process of internationalization. All of this following our idea of growth with profitability. I don't think it's a question of failure in the strategy. I think that there are several corrections, course corrections, due to a market which is much more volatile. As you've accompanied the macro questions, the fluctuations in the exchange rates, inflation eating into buying power, and a market which is more sensitive. We've tried to pass through prices due to the increased costs. We wound up hitting on 6 reais when last year we were below 5, so that's had an important effect. And today, what we're seeing is a more difficult market, more elastic, and more sensitive to pricing. The radar here is much more precise in this process. So I think it's basically that. It's much more with this vision of evolution, be attentive to rethink our processes, and no commitment to making mistakes with mistakes made. It's more a question of separating what is strategy from what is execution. When we look at this function in the commercial side, things winding mixing a little bit. And obviously, when you separate the two, you create a certain amount of independence. And then you're able to, in our case, for instance, do things differently. We have better control over investments, talking about commercial investments with the commercial budgets, bonuses for clients based on the sellout performance of our clients. We're doing an evaluation of deeper analysis of our channels, revisiting our mix. There are structural changes in the pricing process of margarines and wheat flour, with a commodity vision, with weekly meetings, investments in the market based on client loyalty. We're identifying these questions of price using market tools, UF, brands. But I would say that the principal point gives us some dependence on this product and leaving the commercial area clearer for the execution in the day-to-day of their market. I think that's a little bit the idea. Fabio, did you have anything you wanted to add? Next question. Our next question comes from Gustavo Troiano from Itaú BBA. Gustavo, your microphone is open. Good morning, Gustavo, Fabio. Thank you for your questions. I have two questions from my side. First, about these corrective actions, which you mentioned in your results, and then focusing more on the time period during which they will happen. I want to understand at what point in time you perceived, was the end of the second quarter, the beginning of the third quarter, when you saw that you needed to make these corrections, to understand if this is incorporated into the results of the third quarter, or if we can expect results more in the fourth quarter. And also, based on this question of corrective actions, I wanted to understand what are the next steps to be able to understand up until when will this adjustment period go, and this more intense adjustment. I think it's a process of continuous improvement, but the major changes will happen in 2024. Can we expect this for 2025? That's my first question. The second is related to the stocks in retailers. This dynamic of reducing stocks in retailers also happened last year. You even opened up a series of the days of stock that you had with retailers. I want to hear from you if the magnitude of this adjustment is comparable to what we saw last year, or if we're able to differentiate between what we saw last year from this year, and based on that, to understand if there's a scenario where the end of this year will be in the negotiations with the retailers, if you see in any way a readjustment of the channels and the stock in the retailers would be more relevant going forward. All right, Gustavo, good morning. This is Fabio. I'm going to start with your second question first. In fact, with relation to our stocks, as you mentioned, we have seen certain signs that retailers were operating with lower levels of stock, inventories. This has a relevant connection with the scenario of interest rates. It's early to say if this level is similar or will be similar to what we saw in the third quarter of last year. However, the fact is that we have seen clear signs that this was happening. When we have any additional numbers, if you'd like, if it makes sense, then we'll be happy to share those at the correct time. Also, on the question of the action, the corrective actions being taken, when you take a year, we had a retraction in the price of commodities. We had a retraction in the average price. There was an important retraction. On the other hand, when we look at the gross margins, year on year, it expands. However, in our case, with the retraction of the net revenue, several things became unproportional. For example, SG&A. If you remember that our project of 20 and 21, where we brought this SG&A of the company, which was already close to 26% of net revenue, and at some point in time, we realized that we needed to review that, and we brought this SG&A to something closer to 20% of net revenue. However, something happened, the scenario changed, the revenue went down, and the SG&A, speaking in absolute numbers, lower than they were. We don't have it. It's not that we don't have any control, but we need to adequate the SG&A to a new level of revenue. Once this the market improves and revenue improves, then we're going to have more freedom to invest in within the lines of SG&A. And then there's the repercussions of that. This is the concept. Any more challenging quarter than it was in the previous quarter. We weren't happy. We weren't satisfied with deliveries since the previous quarter. You can see that our G&A also went down quarter on quarter, which generates a little bit of what we saw in the second quarter to this quarter. However, it's obvious that the biggest changes will happen going forward. I would say that in the fourth quarter and in the first quarter of 2025. There are some things we can't yet mention, which are still underway. However, in relation to the timing that you asked about, yes, we should have more of a reflex in the adjustment in SG&A in the quarter and in 2025 as well, in the fourth quarter as well as 2025. Thank you, Gustavo and Fabio. Just to add one thing, the actions that we mentioned in the presentation, 100% of them are already underway. However, looking at the level, to give an example, we also froze 100% of our positions in the company. We have postponed or reduced expenses, discretionary spending, third-party expense consultancies. We have lined our investments in marketing up without losing the focus on the new launches and on the healthy products, on the non-unfried lemon and the Piraquê cookies, looking at the current scenario of prices, and we've optimized our structure. So just to pass this along to you, some more concrete examples of things that are being executed currently. Okay, Fabio, thank you. Next question comes from Lucas Ferreira of JP Morgan. Lucas, your microphone is open. Hi, everyone. Good morning. First question is with reference to raw materials. As you mentioned in the beginning of your presentation, there was an increase in the amount of stocks of inventories, and this is all basically in raw materials. And my question is if this is due to prices of raw materials going up, or if you're also increasing your inventories for a strategic motive because you're able to buy at a good price. And how do you see the line of costs in relation to these costs? And due to that, the revenue question. Talking about the new level of revenue, I know that this might not be a short-term thing. Make our revenue go up. However, I think this is a function of the consumer inventories are low and they should go up, or do you think that the prices should recover at the moment that the company will go a new round of price increases? Where do you see this recovery of revenue on this question of volume? What's the driver? And if price could be also part of this recovery process. Lucas, thank you for your question. It's a very important point. And just to correct one thing, not a new level, it's the current level. If we have the current level, then we have to raise through those numbers. We believe so. The SG&A will be normalized. There are certain questions. There's a question of, as Fabio mentioned, of the retailers. The retailers are pressured by Brazil costs. The interest rates have gone up, and this is very clear. Our negotiations are more and more difficult, especially with retailers that are publicly held. We can see that in December. So the concern is higher and higher. There's a retraction in the sell-in. The good news is that we're not seeing any peak in the sell-out, and also no retraction in the sell-out. As you can see, the market has grown. The cookie and cracker market is up by 1, and the pasta market by 4. So, but the sellout is stable, and this is a good news for us. Because with the sellout retracting is much more concerning. Big volumes, but no retraction. However, there's a market, a consumer market, which is more price sensitive, and this is also more and more clear. The need has grown when we price that in. That's why we're doing a review of our entire pricing process so that it can be more assertive in this relationship of price and volume. So there are these two questions: the retail costs, which are more restrictive, and financial costs. The consumer is more sensitive to prices, so these questions of price have to be done much more carefully. The company can still evolve greatly in its execution. The opportunities are very clear. GTM, we're creating the control tower, the client channel program, which is totally integrated and growing quickly with organizational structures. We're reviewing the network of factories. We have the problem with the retailers. We have a problem of sensitivity with the consumer. But there's a lot of things to be done at home too, which we see as huge opportunities. So I think it's a little bit of all three. Lucas, good morning. This is Fabio. To answer your second question, sir, stocks, there has not been any change in our policy of our stock coverage, both in raw material as well as products and raw materials. What explains this level of coverage in the third quarter are the volumes sold below what was expected and what was expected and planned.
And this consequently has caused an impact on the raw materials, principally in the volumes. That's the first factor. The second factor was the increase in the price of wheat flour, wheat, both in dollars as well as reais, between the second and third quarter. No alteration in our policy of inventories. Okay, thank you very much. The next question comes from Pedro Fonseca of XP, of XP Investments. Sir Pedro, your microphone is open. Thank you, Gustavo, Fabio. I have two questions. Well, firstly, about SG&A. You can remember that we already discussed this a great deal in the before our. We looked at a potential savings of millions by the end of the year. We've seen improvements, a material improvement in absolute numbers in this quarter. And my question is, if eventually we can expect a potential savings of 200 million being reached by the end of this year, and if in this 200 million is already included in these actions which were announced in this quarter, or if this is could be even something even bigger in the medium to long term. That's my first point. My second question is follow up, as you were mentioning, about the price of commodities, and especially in terms of palm oil. We saw a very high, strong run up in prices, palm oil, as we saw in the quarter, and even more with the closing of this quarter. And Fabio mentioned that there was no change, no structural change in the policy of acquisition of the company. My question is what the company might be able to do to mitigate this increase in palm oil prices. And if you can share with us how much palm oil could be substituted by other oils, if that's possible. And according to Fabio's comment, a revision of the formation of costs. So my question is if there could eventually, it might be discussed, a revision of revenues for the portfolio of products, looking at the possibility of holding back this palm oil price increase, which seems to be a more structural issue. Thank you. Thank you, Pedro. Good morning. Thank you for your questions. The question of the levers of the SG&A costs, these are underway. They began, a lot of them already were initiated, were raised in the previous quarter. The execution continues strongly. All of the directors have assumed a commitment, and everyone is working in a very robust way to make these deliveries. There have been other opportunities beyond those mentioned in the second quarter, which should still improve our deliveries. If not for the fourth quarter, some things there won't be time, but also for 2025. It's important to have in mind that this entire route maintains the SG&A, which is already representing something close to 20%. I think that's the principal thing, that the principal guidance that we can give. In relation to the palm oil question, we have a flexibility, especially in the fats, to utilize in the margins, especially 35% substitute for soybean oil. We already are doing that. This account of parity with each purchase of one or another commodity, the substitution is already being made by the company. And we still have a series of other levers that we can use in terms of our manufacturing lines and looking at working on the cost of transformation, because truly the commodity prices, there's not much we can do. We can't control that. In the case of Brazil, it's even more difficult because of the depreciation of the real. Beyond a increase in prices, which wasn't so drastic, it was an increase which was compared to the beginning of the year in August. Oil hit the floor, and then it's been going up. But then we look at both palm oil as well as wheat, and looking at the projections of the SGA, we have a small deficit, a global deficit of 8 million tons. It's a gap between consumption and production. Last time I saw it was 105. As it's very close, production and consumption is very close, but there's also a surplus of wheat. There should be no big spikes as we saw due to the pandemic and the war, but the price which is close to what it was at the beginning of the year. So it's a little bit of that. So what can I do to reduce my cost of transformation, optimizing my processes, and whatever I can do in the way of mix of oils, looking at a better parity. We also have some flexibility than some industries, and for instance, in margins. And this has been our playbook here internally. Thank you, Gustavo. That's great. Our next question comes from Thiago Duarte of BTG Pactual. Senor Thiago, your microphone is open. Thank you. Gustavo, Fabio, it's a pleasure to talk to you. I wanted to go back to the question of Isabella, talking about the diagnosis that you make or have made, and you've already discussed quite a bit on this call about the elements which explain the results for the quarter and the initiatives which you have announced. Have you brought anything? You brought some things which talking about the politics, the policy of stocks for retailers, and at the same time, you've also announced in a quarter like this, a series of measures seeking efficiencies, pricing, commercial pricing, strategies, etc. It's not clear to me how much weight you have given to these factors which are more external and how much are internal in execution or strategy. And perhaps a way that we could line this, and I would ask you this question, to think in relative terms. Because when we look, for instance, at the data which you have given us in relation to the market and sellout and so forth, and give us an idea of how the demand is going in the categories at the end of the line. It doesn't seem that there was anything big. There's no big changes in that area. But thinking about the volatility of of commodities and exchange rates, it's not the first or the second time that the sector has gone through volatility of this type. It isn't too long that we've seen magnitudes which were even higher. And we saw in this case a very important retraction, a volume with high relevance to the average price. So I wondered if you could tell me how you understand the relative performance of the company in this quarter in relation to competition, principally in relation to competition. Hi, Thiago. This is Fabio again speaking. I'm going to start with the answer to your question. I think that obviously this is it's not a mathematical equation to isolate just one factor from another. As you mentioned, what's external and what's internal. In our vision, looking at in the recent quarters, there is a higher weight in what is internal, and Gustavo has identified a series of opportunities that we have in the execution of our plans, both from the standpoint of commercial questions, pricing, and the opportunities for reduction of transformation costs, logistics, etc. A series of lines which impact both our results as well as our balance. In parallel to what we've seen in results in the last two quarters, in the second and third quarter of this year, with our previous margins, it's not what we'd like them to be. What we've delivered in the second half of last year, looking at the volumes and margins, close to 16%, we didn't have any question, no structural question, either in the market or in MGS. Nothing relevant structurally in the quarter between these two periods. From the standpoint of execution, we have a series of opportunities which have already been worked on and recaptured. So in our reading at this point in time, there's a retrospective in the short and medium term, questions that are more internal rather than external. Naturally, these external challenges are there. It's not the first time that we've had volatility in these prices. However, there has been very strong volatility accompanied by a devaluation of the real between the second and third quarters, which created a huge additional difficulty. At the same time, with higher interest rates still high, we've noticed that our clients are more cautious in relation to their management of their working capital, and so it puts another pressure on the system. This is conjunctural or structural. We're not sure. We're gonna have to wait a little bit to make this affirmation. However, we observe, yes, that there is a conjuncture that has brought elements, not new elements, but a combination of elements in a very short period of time. And this wound up unlocking a series of plans which were already on our radar for the improvement in the commercial execution and cost of transformation. I hope I've answered your question. We're not able to answer putting all of this in a mathematical equation. It's very difficult to isolate these factors, these elements. However, that's our reading of the diagnosis which was made in recent months. That's perfect, Fabio. Just focusing on this, understanding that the fall in volume is a primary variable in this discussion. When we look at the sell-in with lower volumes and stressing this question of the retailer stocks, do you understand that the share of M. Dias in the sell-in has changed much in this quarter compared to the previous quarter? Or do you think it's just a reduction in volume which has affected the market overall? I can't answer you with in terms of share of sell-in because we don't have that information from the competitors. So that I really can't answer. Okay, thank you very much. The question and answer session is now closed. We'd like to pass the microphone back to Gustavo to make his final comments. Well, thank you all for your participation. Once again, it's a pleasure to be with you. We continue available with the IR team to continue our conversation. If you have any other questions, any other specific questions, we're now seeking the optimization, the adequation of our SG&A and the increments on our volumes to increase our volumes. We'll see you again on our next call. Thank you all very much. The video conference of M. Dias Branco is now closed. We thank you all for your participation, and please have a good day.